Eric Mother, mother.com, March 1st, 2016. So as we begin the new month, it makes a lot of sense to take a look and a closer look at monthly charts, because sometimes they can set the tone for the new month and probably even sometimes change the way markets are behaving. So if we take a look at the end of February, being February 29th, which was yesterday, we can see where the market closed. And it's important to note this because for the month, we ended the month of February at 49.42 thereabouts on the RSI for the monthly for the S&P 500. So for this month, if the S&P 500 can move higher, and in fact, what I can show you here is, let's take a look at a monthly chart. I mean, not the monthly chart, but the markets trading right now. We've been trading for about an hour and a half for the first couple of hours for March 2016. And so here we are seeing the market begin the month with a nice move higher. We'll see whether it can hold. But the key is, keep in mind that we close at 49.40 on the monthly for the SPX, and we had a bounce at the 50 level previously, which was towards the end of 2015. And if the market can now build on this, it's a big if the market can build on this, this would be very good support and might suggest that the bulls are now starting to take control of the market. So here we are looking at the RSI, the risk being that we have to be careful not to be caught short if the market turns and moves above 50 for the new month, and also if it holds above 50, maybe it might suggest a strong month for the month of March. If we take a look also at the Nasdaq, and just here so we can have a point of reference, the Nasdaq closed at a very curious RSI level on the monthly chart, being at 50.04. And now this is a little bit of a trick here, because if the market were to slide and turn down for the month of March, or whenever it moves below 50 now, it might suggest a big down month. And that's why I've been saying it's a very curious time in the market here. Somebody's going to make a mistake, either the bulls or the bears. But the way you gauge which way markets at least positioning is how they are going to be trading in relation to their 50 level on the monthly. And we take a look at the Dow just as a point of reference. You can see that the Dow closed at 48.07 at the end of February. So we have to constantly keep tabs of these levels, because if the Dow were to turn up and be positive for the new month, moving above 50 might suggest a strong month, as we did here. We moved above 50 here in September, November time period, which was right there. This was a strong month. So as we moved above 50 and held the 50 level, this was a strong month. One did not want to be short during that time period. So we can see this is a critical time in the market. We have to be very aware that the risk here is that the market can play games and probably be setting up to go in the exact opposite direction. And so now if we check at the live chart, this is now live, taking in consideration the new month. We are March 1st, 2016, as you can see. Now we are seeing that the Nasdaq is still holding above 50. And in fact, what I want to do is show you the long-term monthly chart, because this is where the game is being played. And this is one that we really don't want to be caught not being sensitive to the idea that here in 2010, if you use this double bottom support for the market, it took a couple of months, maybe about 3-4 months for this to form. But around here, once that was formed and the market moved back above 50, you are better off to have played the market from a bullish perspective, because the market went to fresh highs. Let me show that. So the market went to fresh highs there. We came again and did the same thing, held the 50. Remember, this is not you or me or your neighbor doing this, it's the entire market complex. And so once it held there and moved above 50, you are better prepared to have played the market long, because eventually we went to make fresh highs. And so here, even though it seems fantastic right now to assume that, but if the market holds, remember this is the market doing it on its own, if the market holds. And I need to stress this, because of course we don't know. We're going to have to play have a close look at the market, because if it's a big if the market continues holding above this 50 line, for example on the Nasdaq monthly, then that suggests that we should not be surprised that the market eventually goes to make fresh highs. So that is a major consideration as to how we should trade this market. Now, of course, if the market was to turn down and the Nasdaq, which remember closed at 50.04, if it turns down for the month and cracks below 50, we want to be short, or at least take that opportunity and have some short exposure. So there's a lot of risk here that the markets could be setting up to play games. And even on this chart, you can see that in the prior years where the market held 50, we had a multiple move to fresh highs. This is important to recognize that. We had another instant here where we held the 50 for these lows, and the markets went to fresh highs. We held the 50 here, and again the market went to fresh highs. We held the 50 here in 1998. The market went to fresh highs after making the lows there. We came close here for the lows there. Market eventually went to fresh highs. We had uniform activity below 50 and back above it for the lows there. The market went on to fresh highs in 1991-92. So what I'm getting at here is it is a very critical time in the market. We take a look at the SPX. And here we can also see the same type of action here. S&P 500 holding above 50 is a big deal. If it can continue holding above 50, we have to start being open to the idea that the market could eventually break out. And of course, like I said, it's a big if. We just began the month. The market could easily turn down for the rest of the month. Who knows? But this is telling us we have to be very careful not to assume the market cannot go higher. In other words, if we have short position exposure, we have to make sure that we have some representation, or at least we have to make sure we have stops, because if the market is to move higher, we are gonna get burnt if we don't respect that. Now take a look here at the Dow, and the Dow right now also looks like it might be potentially wanting to move and form a double bottom on its monthly chart. And again, this is a big deal. The last time we had a double bottom support was here during this period. Big deal. And so right now we can see that the Dow is trading at about 49.76. And so the more it moves higher, and the more if and when it clips above 50, boy, we have to be very aware. Now keep in mind, here's a trade. If the market holds 50 and builds on this 50 level, we have to be playing the market from the long side, and there's going to be a lot of profit to the upside if it happens. Keep in mind, and I need to stress this, because we've only been trading for 1.5 hours for the month of March, we have to be aware at some point it is very likely that the market could turn down for the month. And not only would it be breaking down, it would be moving below 50, for example, on the Nasdaq, which would be a sign of a market that is now going back to a bear market. So it's a very serious time in the market. I'll show you what I'm talking about here. So if we turn down in the coming month or months, if we break through that to fresh monthly lows, that would be a major sell signal, because you'd be moving the monthly charts to 3-year lows, and that would not be where you'd get a market moving high. In fact, the market would go back to a bear market. So there's a risk there. If we break down below 50, you can see that the main MACD for the Dow, as of right now, the Dow is already trading at 3-year lows. The MACD here could also move to 3-year lows. So it's a very, I think, critical time in the market. One of these scenarios is going to play out, and it's going to play out beautifully. So what I can do here is we need to take a look at the market and draw some lines. Here we need to take this 2015 monthly closing low for the Dow and set an alert. So that being the most recent monthly closing low, as you can see, the market has not closed below that since it recorded that low. So we've held above that. We haven't closed below that on a monthly closing basis, which is also another reason why we can say that this was monthly support here, and the RSI held. Okay, so that's a good thing for the market beginning the new month up about 1%. Good thing. Now what we can do is take that 2015 monthly closing low and set an alert. If the market were to come and break through that, we need to be aware that would be suggesting that the market is moving to fresh lows, to fresh 3-year lows on the RSI and the MACD. For the Dow, the level is 16,284.70. Okay, so right there. If the market was to crack through that, that would be a major sell signal. Right now the market is holding above that, so net we can lean towards a market that is behaving very well. Okay, now that's for the Dow. Take a look at the SPX. We need to have these numbers and watch them closely. Here we can see that this held again, 2015's monthly closing low held. So we can see that while the market here was threatening to break down, it actually held, did not close below that 2015 monthly closing low. You can see here it's trying its best to hold the 50, and that's a big deal. I cannot stress that enough. And for the SPX, the level we need to watch for down the road is if it ever cracks below 1920.03. Anything below that, if it ever moves below that level, that's when we are gonna know that this is a market we need to play from the short side. Right now the market is doing its absolute best to hold this 50 line, and that's a major change over the last couple of weeks. We take a look at the NASDAQ, and the level to watch for the NASDAQ, and here I need to stress that the NASDAQ did actually break to fresh monthly closing lows. And we can also use 2015's, so we can still use this 2015's monthly closing low for a point of reference. And the reason being that if the NASDAQ continues holding above the previous monthly closing low of 4620.17, if the market can continue holding above that, right now it is trading at 4631, it means that the NASDAQ has now finally recaptured 2015's monthly closing low. This is a big deal. And also we can see, more importantly, the RSI is doing its best to hold this 50 line. Major thing to consider. So unless the markets are breaking down on the monthly chart on the price level, and unless the markets are moving below 50, we have to be aware that we might be entering a market that is concealing the fact that it could very easily, potentially be setting up eventually in the coming months. I'm talking about maybe sometime in 2016, 2017, that the market would actually dare to make fresh highs, as long as this monthly chart holds. Keep in mind, again, we have to understand that this is just the beginning of the month. You know, who knows, a week from now, 2 weeks from now, we could be down for the month substantially. But for now, market's holding. We have to respect that. In other words, if you had short positions, and especially if they're triggering stop levels, you need to be stopped out. It's fine, because there is a possibility that this could be a turn point in the market. Hope that makes sense. Just wanna stress that we always have to change our views month to month, and now that we've begun a new month, we have to start anticipating the potential for new energies. Otherwise, we'll see how the month is going to conclude. One or the other is going to play out, either for major recovery in the markets, or eventually they turn down for a major break for another major down drop. Of course, we'll keep this at close tabs and watch what's going on. Otherwise, We'll see how this go plays out. Eric Muadith, Muadith.com. As always, good luck, peace, and blessings. E-A-C-S.